Hello everyone, welcome to our new webinar. It's Monday, September 22nd. Hope everyone had a wonderful weekend. Just let me know if you can see my screen. I believe it's sharing on YouTube. We are 3 minutes late, so I was just watching some charts around and completely forgot to click live. Looks like that we are good to go. Okay, as you know, Powell last week cut rates by 25 basis points, more than not more than expected, what I'm talking about, by 25 basis points as expected, but somehow Powell was sounded a bit of concerned regarding inflation. He mentioned inflation plenty of times, and it became pretty obvious that it's not really clear if he want to be aggressive on cuts going forward from here. So that's why we have seen some stabilization on the dollar with the US yields, and we can see that the US yields failed to break and push the prices below this trend line support. In fact, we are moving slightly higher. We even finished a week above that trend line. So I'm just wondering if maybe we will get a surprise and market will continue higher, especially if we consider that that whole market went maybe too far with the potential dovish views on the Fed. If we consider how Powell basically approach the press conference on Wednesday last week. So maybe the market will have to reprice a lot of movements here. It means that the US yields could possibly even start moving higher, especially if there would be some evidences that inflation is still a problem here. And I believe that core PCA will be released, I believe, on Friday. There will be also in between during the week Fed members that will be commenting on economy, and of course this could cause some short-term swings around the FX, but overall my views remains unchanged. As I said already for the last few weeks, that I'm anticipating that sooner or later dollar will bottom, and that possibly we could see even a next swing higher on the US yields. It's completely different of what market has been looking for and expecting for the last several weeks. So as you know, if the market does the unexpected thing, it could be real big movers ahead of us. And if we take a look on dollar index itself, I mean, it's pretty interesting what happened. So as soon as they cut rates by 25 basis points, we have seen dollar index making a new low, and then it reversed pretty significantly and even closed a bit higher here on Friday. So I'm wondering if maybe bottom is already trying to form. Of course, there's still obviously a chance that we will see much deeper wave 5 here and maybe even retest the lows. Now from psychological standpoint, it may not be that surprise if this happens, because if some traders, investors are early to recognize that maybe Fed will not be that aggressive with cuts going forward, then of course maybe some traders are already building longs and a lot of stops could be placed down here. So if we see another fake out here and maybe then a reversal on after this Wednesday spike low will be triggered, then of course that's also a very valid scenario. But overall, I still think that we are in a very late stages of this pattern, and that sooner or later we could see a recovery on the dollar. And as I said last time, it was very similar play here in September of 2024. So dollar has moved to the downside based on Fed cut expectations. They cut a few days later on September 18, I believe they cut. Few days later we have seen a reversal bottom on the dollar. So maybe something similar could be seen here as well this time. Now regarding an ending diagonal here, or what would be my final confirmation that we are already bottoming, is especially if we see a daily close above 98, then I would start considering that we will move straight to the upside. But I'm already observing with our members some short-term pullbacks that are happening just right now. I think that if we'll have some interesting corrective price action on this pullback, maybe this could be an early teller that we are already bottoming and that we could see more gains here. I'm also looking at the euro dollar. Obviously, in such case, I want to be euro dollar short if dollar has bottomed. And here we recently stopped at this trend line. And if you will look at this price action on the bar chart, it's not really that clean. But if you will open like an hourly line chart, well, their situation is a bit different. So I posted some updates earlier in the morning for our members, and I really have this one on my watch list, because I would not be surprised if this trend line will get broken this week, and then obviously we could continue much lower. But while the trend line holds, I also prepared another alternate scenario here, which shows that maybe we have a bit of smaller ending diagonal than this first one that I've been tracking for the last several weeks, and maybe that was end of a wave 4 and you are now still in the middle of wave 5, and we will see maybe another push to the upside. So in such case, this whole area still, in my opinion, remains very important potential resistance around 119, 120. So when I'm looking at the price action in the charts and maybe trying to forecast where the euro could be in the next few weeks, it doesn't really matter to me if we will see another high here or maybe that high is already in. I just think that towards the end of the year we could see euro dollar coming to the downside into the consolidation. And of course I will be watching the intraday substructures, not shown here, but that's only for members, that I will where I will try to, with the intraday patterns, will try to find some interesting maybe early opportunities here. Also, if we take a look on cable, as you know, this one has been pretty strong, but what happened last week? Well, we have seen a rejection from above the 78.6%. We really didn't clear these highs out. So in my opinion, we are now just in a neutral phase here on cable. These ranges here from summer could stay still in play for some time. But if we think that we are going now from into the complex correction, then my assumption is that we could move closer to the lower side of this summer range, because clearly that was a free wave rise here, and recently we sold off pretty aggressively, and that's much more impulsive drop here. Okay, so because of that, I think that could either be wave 1 or wave A, but definitely after some rebound I would be looking for more weakness. So firstly, as you know, we've been expecting a push above 136, 135.90, which was seen as a very strong resistance, but because that was a free wave drop, I expected that sooner or later uptrend will resume into the third leg. But now, since we fell back below this very strong level, of course, I'm seeing this once again as a very nice potential reversal point, but this time could catch the upside on a wave B or wave 2 rally. So I think that more weakness could be seen here on cable, and maybe even some opportunities could show up while the market trades beneath 137.28. So that's for the near term forecast, but looking at maybe some midterm, of course, I am more neutral and want to see this either ABC as a flat correction completed, maybe even if we stay between these big levels, could be even some kind of a triangle. But as I said, even if it's a flat or a triangle, we need 3 waves down. Now also looking at Aussie, as you know, last week I highlighted some bullish patterns on Aussie. I said that it could be very interesting for more upside. I was specifically focusing on the 6625 level. So I said that this could be very important support, but what really happened is market, as you can see, moved through the support and even closed here well below that level on Friday, and now even trying to break this trend line, this channel as well. So I'm thinking that we will see a minimum deeper free wave ABC decline. Maybe even the whole price action from July could be some kind of a flat if we see some more sell-off. So for the next few days, I think that even Aussie, which has been seen very strong, is now turning to neutral and signal for even more weakness maybe after some rebound. So even on Aussie, I think that this correction, if will be correction, is still incomplete. We could move closer to 61.8% in my opinion. So that's for Aussie dollar 4-hour time frame. If you look at the daily chart, so that was the trend line I was focused on. So we really didn't break through. We failed at this trend line. That's why maybe we have to consider that this correction that we are seeing right now may not be just over yet, and we could maybe stay sideways here in this very nasty price action, I should say, unless we see a break, a very sharp one above 6,710. Then maybe we could get some clearer price action to work with. But for now, it looks like that we could be headed back into this mess through from summer. Now looking at dollar versus Swiss franc, this one also printed new lows and significantly reversed from there. As you know, Swiss National Bank even highlighted that at some point, if needed, they will move to negative rates, and that's something that surely will impact the Swiss franc, but so far we already have some very nice reaction from that lows here, and I would not be surprised to see more upside. We even broke this channel that has been in place from late August, so maybe now we are already trying to make at least 3 waves to the upside. So I would be also looking for more upside on this one. If I'm wrong on the short-term call and we see another retest of the lows, my idea will still be somehow similar, that we sooner or later will be bottoming here and then maybe reverse from slightly lower levels here. We have a bit lower fib levels that we could focus on if the lows from the last week will be taken out. Now let's take a look also on dollar yen. So dollar yen finally broke this 146.20 floor, but only for a few minutes, and then, as you know, after Powell, market quickly reversed, and now we are back in this very nasty range. It could be flat correction, so in such case 149.15, 150 is still very strong resistance. Maybe even reverse triangle could be also a valid scenario here, but this one are very rare patterns. But anyhow, it suggests that we could see movements toward the upper side of this range, and then let's see what happens there. So even dollar yen, in my opinion, for now, it still has some unfinished business with this intraday structure. I'm not sure what can trigger the next sell-off here. Maybe it will be Bank of Japan, who knows. But I certainly think that this resistance maybe will not be easy to beat here to 149.15 to 150. Even if you look at the daily chart, I mean, it's a very nasty price action since April actually, and maybe not the best pair to look for potential trades in the near future, in my opinion. Maybe we'll have some better, clearer wave structure somewhere else. Now let's take a look also on gold. So gold is moving to new highs, and I firstly expected that wave 4 will be a bit deeper here, but now when we see prices at new highs, and if we consider the rule of alternation when I'm tracking the impulse, so here was very deep wave 2, right? Well, here could be a irregular correction for a wave 4 then. That's the rule of alternation of an impulse, where corrective waves of the same degree will form different patterns. So that's one thing. The next thing is that was the length, the time of a wave 2, and that was then the length of a time of wave 4. Very similar, as you can see here. So that's why I came out with an idea earlier this morning when I woke up and updating the charts for members, that we are possibly already trading here in the 5th wave. What's really interesting, not sure if you noticed, but when market opened, especially futures market, we have seen a sell-off on cryptocurrencies and Bitcoin. At the same time, interestingly, metal, gold moved to the upside. That was pretty interesting to see, like some kind of a manipulation that I will also talk about on Bitcoin a bit later. So when it comes to the wave structure right now, well, we have these 5 waves up. We could be in a 5th wave. Of course, it doesn't mean that we are topping yet here. There's still room for more upside, maybe even top of the this impulsive channel as well around 3,800 or maybe 3,770. That's the potential, the ideal zone for this 5th wave. Also, you have divergence on the RSI as well, so I think that sooner or later we will we will here come to an end of this fifth wave, which is very aggressive out of the triangle. But definitely you don't want to step in front of this train here, but just be aware that we could be seeing some consolidation towards the end of the year. Also, there's a lot of as you know, a lot of hype, positive sentiment going on metals right now, which also maybe makes sense. Even if dollar is trading higher, we are seeing gold as well coming to the upside, but that's maybe because if inflation is really still the problem, well, metals are seen as an inflation hedge, as you know. So that's why maybe just after short-term dip, gold was able to find and attract new buyers here. But again, when looking at the wave structure, maybe it's not a bad idea to maybe book something on the way up, and everything else is let to the market decide what it wants. Here I'm looking at silver. Now silver also moved to the upside. This one is already at the top of the channel here. But if we look at the subwaves of a fifth wave here, maybe there will be another push higher. Also, the RSI is at the upper side as well, moving into some extremes slowly. So I think that even this one shows that we could be in a fifth wave, and maybe that reversal around 44 may not be that far away, because whenever you have 5 waves up, you would expect a minimum 3 wave retracement. And if you look here on a daily chart, that's maybe even better shown here, we have a pretty nice extended lag, and even these 5 waves on a smaller scale feel could complete the leg up that began back in April. What's maybe also interesting is take a look at gold-silver ratio. Keep in mind that whenever gold-silver ratio moves to the upside, this usually suggests that metals are in a recovery mode, which is happening right now. Okay, but what's the most important is to recognize the patterns, what the gold-silver ratio is telling me at the moment. Last week, I also shared this chart with our members. Maybe I also shared it in webinar, I don't remember well. But anyway, last week I said that silver could possibly outperform gold with the next leg to the upside, because that back then I was seeing wave 4 in consolidation here in gold-silver ratio. So what's happening right now? We are already the new low, meaning that we are already at the fifth wave. Triangles occur prior to the final move within a larger final fifth leg that will complete this larger bearish impulse. So it means that after this wave, fifth wave down, we should be aware of this correction. So if gold-silver ratio will move to the upside, well, what that means for other two, gold and metal, well, they could basically see a pullback lower. So if you take a look firstly here maybe and compare the top of the chart, you can see here that let me grab this pen. So here gold-silver ratio moved to the upside, silver was consolidating. Same thing with gold, here was consolidating as well, right? And you can see similar examples here. So this yellow boxes shows the consolidation whenever the gold-silver ratio was moving to the upside. So gold-silver ratio is not really recovering yet, but I'm just saying that from an Elliott Wave perspective, since we have these 5 waves down, I would not be surprised that we see this correction at some point. And whenever this will happen, well, what will most likely we see on metals is a new consolidation here. Okay, so that's something that we should consider, and I would really not be surprised, because as I said, both on the silver and gold we see prices in a fifth wave. Now let's take a look also on crude oil. So last time when we spoke about crude oil, we said that firstly we were looking for a wave C to the downside with some aggressive 1-2 bearish scenario, but I said that because the price is still holding this support 60 and the corrective rallies are showing up from the lows but still in somehow limited ranges, maybe the running triangle bearish one is the best potential wave count on this chart. So I came out with an idea that was impulsive and that was a correction. So where would you expect that the next strong movement will occur? to the upside or to the downside? Well, triangles are continuation patterns, so obviously I'm expecting move to the downside, and so far the week on Monday you can see that we are already breaking this channel support. So I think that this third leg to the downside, wave C, could sooner or later take this 61 floor out and maybe even extend closer to the 78.6% fib level of this whole recovery here from April of 2025 to June of this same year. Okay, so I think that crude oil for now could see more weakness. Also, I shared this chart as well. I believe I did it on X, not this one, but this one, where I highlighted that each time when market rallied, it came close to the 61.8% compared to the very sharp sell-off, and later on we have seen a sharp reversal. So it happened here back in July, at the end of July through August. Then again early in September we retested, we came close to 61.8%, we fell, and recently I highlighted the same pattern with the same fib levels here around 64 being a very strong resistance, and you can see that we are coming down pretty nicely. So I just think that it's just a matter of time when we'll finally break these levels here. Also, now let's take a look on some of the stocks. So firstly, German DAX, I adjusted the wave count here on German DAX because clearly this market was pressured to the downside, but looks like that we are not forming any kind of a top yet, because what I see here is some overlapping price action. Especially the most important thing is that in the first leg here, okay, you have these 3 legs down, and then we got rally and now further weakness. So this looks like it could be a complex correction, maybe even WXY here in a wave 4. So what I would be watching for is potential stabilization. By the way, we already have seen some very nice rebound at the end of last week, but not really breaking through the previous horizontal resistance levels. So if we see some more weakness, I think that when you look at this chart, you can very easily identify the important support. It should be around 24k, also round figure. As you know, psychological levels, round figures, this could be also very important, especially when you have these levels also already forming swing highs and swing lows around these round figures. So I think that that's a pretty interesting zone where the market could possibly stabilize if we'll see a bit of more weakness. But if we see a break here above 24k, then I think that maybe there is a chance that wave 4 has already finished here. Now let's take a look also on the S&P 500. This one did not really make anything interesting on this higher time frame chart just yet, but what has been interesting is that we have seen some sell-off here on Wednesday, but if we'll take a look on the cash market, okay, we haven't really filled one of the gaps here. So by the way, that's the spot, the cash market, and you can see that each time since start of the month, okay, we always, when we had this gap, market filled the gap and then resumed to the upside. But notice that we have one gap here from September 11th. Okay, so that was a gap. Market then make another gap, but then finally it came to the downside, it filled the first one, and then during the Fed press conference the market has came to the downside, but really didn't fill this gap here. So in my opinion, there is a chance that at some point in the future we will still see market trying to fill this gap. Also keep in mind that market investors, stock market in general, whenever they are cutting rates, well, market will try to position traders on the risk on mode, okay, because that's just bullish for the stock market. And I'm pretty sure that there must be a lot of stops just below that level, 6551 level. So that's also the area where we have this unfilled gap. So if suddenly we see market that will retest this fat level, if I can call it this way, then in my opinion this could be next potential very interesting support. This has nothing to do with the Elliott waves. Okay, it's of course it's even better if you can do a combination with this kind of approach with an Elliott Wave patterns as well, but I'm just looking this as a pure technical perspective, and the market, each market has somehow its own price personality of movement, and I think that as long as it works, it's just maybe not bad idea to keep an eye on this kind of a developments here. But if we look back, if we go back to this wave count, well, I still think that that's a bull market, that even if we will see some kind of a bigger sell-off here, of course this will still be seen in our eyes as just a wave 4 with an uptrend. The question is when this wave 4 will show up, we don't know, but of course it would be much easier for risk off to show up if the dollar would really continue to the upside. If the dollar is really trying to bottom here, then, and we see something aggressive to the upside on the dollar suddenly, then we could see some sell-off, and you will see that market will then start to consolidate here here on stocks. And I also have here a lot of other big indexes, and all are still in uptrend, but even if we see a dip here, a bigger one, it will be seen as a fourth wave. Now let's take a look also on some of the single stocks. By the way, I updated some of the single stocks on Friday. So by the way, it's completely free, US stocks, single stocks. It's still in beta version. All you have to do is just register on our website, then go to under plans and sections, and you will be able to activate free access. So absolutely no obligations for now. It's still in beta versions, and then you can obviously download this report here where we cover a lot of single stocks, and also I explained on this latest report here what I think about the US stocks and in combination with the dollar. So if you're interested, make sure to register, and you can download this for free, as I said, and this in red are the markets that are covered in this latest report. Now let's take a look also on some of the single stocks. I mean, what's the most interesting is probably Berkshire-Hathaway. I mean, it has a, if we look at the B, because that's something what you trade. Now if we take a look here, I mean, it's a very beautiful pattern. So the reason why I'm bringing this on, because whenever I'm looking at the price action, at the charts, at stocks, currencies, whatever, I want to focus on something that has a very clear wave structure. Okay, if you just ask me, Gregor, what you think about this and this stock, and I see a massive price action, well, I don't need an opinion. I will give you and share my ideas on what has a very clear wave structure, because these are patterns that are very easily to read and if that's the case, if you can recognize the pattern pretty fast, well, that's where interesting opportunities could show up. So here what we have is a very nice sell-off, which looks like an impulse, and more importantly, we also have an impulse from the lows. So this could be wave C of a completed flat correction, and we could see more upside later on. Or even if I'm wrong, and let's say that will only be a temporary ABC rally, well, that's still more upside for wave C after the current pause. That's one thing. The next thing is that we still have these unfilled gaps from earnings that were released here back in May of this year. And you know that after some pause here, these earnings, whenever market decides to turn around, these gaps, or not earnings, could be very interesting new target zone, and then we could see a next new reversal. So I think that for now it looks like that we really could see more gains here, and I would be wrong if the market drops below that level here with the current pullback, seeing this as a temporary correction, and I'm expecting another push to the upside. Now let's take a look also on Coinbase. I think I also included this one as well in our stocks report. So here that was an IPO date, and market is, you know, moved sharply to the upside towards this level, and then which usually market does, it does the unexpected thing. It reversed lower after completing these 5 waves up. right at the 161.8% of this wave 4. So that was quite important reversal, and once again we have this gap, and that was an impulsive sell-off. And if you take a look closely here, you have some sideways price action. So I think that that's a wave B rally which already is in this gap, maybe still a bit more upside, but what's the most important thing here is that the next leg could be to the downside. It could be very similar and sharp, impulsive like this one. So I think that correction here is incomplete, and maybe this will have some impact on cryptos as well. Not to mention here MicroStrategy, that is also still sorry, I'm talking too much and too fast. So here also I'm looking at this ongoing fourth wave. It's a triangle. We also have some small 5 waves down here, so I think that more weakness could be seen towards the lower side of this range, maybe the 61.8%, and this obviously means that even cryptocurrencies could stay in consolidation. And if you look here on the cryptocurrencies, what really happened here, I'm looking at the futures market. As you know, I said that that's the pretty important level here because that was a gap on futures, right? So market was able to maybe took out even some early shorts, and then now finally it reversed to the downside. What's the most important right now is that the futures market opened at midnight, right, and Central European time, and then market collapsed. So market, Bitcoin itself, it could have seen a sell-off during the weekend, but it didn't on the spot market. So because it collapsed after the market, the futures market opened, well, to me this tells me that that was manipulations on the futures market, right? So someone wanted to short this market, and it wanted to do in the futures, and that's why this sell-off came after the market opened. So what this market trying to do here is maybe to just to pressure to bring the price even lower, so that there will be even more traders, specifically maybe even in spot, afraid, and they will exit the positions, and then big players will try to buy back from you from the lower prices. And if you look now here on this thing, and what this might concern for, let's say, for the next few sessions, is that we don't have a gap here now that would maybe try to bring the price higher to fill this gap. So I'm just afraid that we could see even more weakness. And even if you take a look here on on liquidations heat map, you can, what I just did, you can see that there's a lot of orders here at the bottom of this September range. So it looks like that this could be the next magnet for potential sell-off, and then market could stabilize. Also, if you look here at net unrealized losses, as I've been discussing already about this a lot of times. So I said that it's much easier to recognize or expect a potential stabilization of Bitcoin and a next swing to the upside whenever net unrealized losses will reach some kind of extremes. Could be long-term extremes, short-term extremes. And if you look here, that was the most extreme level from during summer, from the last few months here at the end of August. Here we also had a slightly lower extremes at the early August. Here was June, and you can see that each time when we have seen this kind of extremes, market then reversed higher. But now when I'm looking and maybe trying to compare the current situation with the previous extremes here, well, I'm not seeing something that would catch my attention here that would tell me that cryptocurrencies that or Bitcoin itself is trying to bottom. So this tells me that there could be more room for more of the losses, and then finally when those traders that will accept the loss, that's when, unfortunately, that's how the market functions, that's when Bitcoin could stabilize. And I would not be surprised if this will happen at these levels. And also if you look maybe at the wave structures here, of course we are still showing you 2 wave counts, but the primary wave count suggests that we could resume to the downside. It would be even more bearish if we'll have 5 waves down on the spot market as well. But the futures already could be something that tells you that we are going lower. Also, this one is something to watch for. I've been looking for this ending diagonal weeks back, not weeks, if not months back, and now still it's a valid pattern here, and not something that where I would confidently look for any kind of a bullish setups. Even if the market, I'm wrong and market goes higher, it's absolutely fine. Okay, that's just something that I don't buy down here. I just better be aware of what can happen next. And as you know, we also have this cycle analysis as well, which shows that October could be the end of a 3-year bull run, and October is not that far away, so we are closely moving into this period. Okay, what I have left here on my list, looking also on the Ethereum. Last week we also said that it's not really clear, that we are more leaning towards bearish view than bullish, unless we would see a triangle, but we have seen our reversal, and that's a very strong one. So even if that's now wave C, okay, or wave 3, well, looks like that we have some room for more weakness, unless we see a break above this 4417 level. That's the short-term invalidation level of the current weakness. So only above that level, I think that we could argue that bulls are back. Also looking at Litecoin, this one is also coming to the downside, and I think that we have to respect what the market is doing, and even this one could possibly be headed towards the C2A target, which is still a bit lower. I think that 100 level is something to watch for, and if you look maybe at the daily chart, maybe that will be the trend line support, could be even an ending diagonal, and you are now in wave 4. Let me just label here. So that's the pretty important support here, around $95 to $100. Looking at Ripple, this one came lower. Maybe it came out of a triangle, maybe even something else here, but I'm definitely not seeing the pattern that would be bullish from here. I would patiently just wait. Maybe if we can once again see $3, and then maybe a few days of stable price action above $3 could convince me that we have an early bottom in. But until that happens, I just think that risk is more headed to the downside. Looking at Solana, we also talked about this one. We said that maybe it could be even a throw over here, and when the throw over is confirmed, when you have the price that returns from these extremes and falls back into the wedge. Okay, and now if the lower trend line of this potential wedge is broken, then this is not looking good in my opinion. I mean, the whole cycle here with that drop and this three-wave rise makes me, or puts me more into the neutral phase rather than bullish structure here. Traders, I hope that you enjoyed this presentation. Once again, please press like on this YouTube. I think that I share a lot of useful, interesting information, especially if you are new to Elliott Wave's principle. I just always will try to share my clear views and try to explain how I see the market, so that you will be able maybe to do it on your own. But if you want to join our community, make sure to visit us at wavetraders.com. We have, as you know, all of the markets that we are covering and plenty more, and US stocks, cryptos. We also have a lot of altcoins there. So make sure to visit our website, and hope to see you in our chat room. Traders, good luck this week. Talk to you soon. Bye.